PayPal stock got absolutely crushed after their latest earnings release. Welcome to the Fiscal Philosophy YouTube channel. I have shares of PayPal. Just because I own the stock doesn't mean that it's right for you, but I will discuss why I'm interested in potentially doubling my position in PayPal at this point. I think this is potentially a really great opportunity. Very honestly, the market's reaction to this latest earnings is a little bit surprising to me. For one, PayPal finished 2023 with a solid fourth quarter, and their revenue increased 9% year over year and 8% compared to the comparable quarter the prior year. They mentioned entering a 2024, quote, year of execution, which basically means focusing on the long-term things in the business that will drive the future growth in terms of revenue and profitability. They are still expecting what I believe to be respectable growth in Q1 of 2024 as compared with the comparable quarter in the prior year. And again, I don't think this is the thing that's causing the share price to go down. I think the big driver of the negative sentiment here is in the fiscal year 2024 guidance, where they said that they expect non-GAAP earnings, meaning the adjusted EPS per diluted share, to be in line with the prior year, meaning similar to what it was in 2023 at roughly $5.10 per share. At current share prices, that's a little bit like not even 11 times. And I think the reason why they're guiding this way is because, again, they said that they're focused on the execution of the various initiatives they have to propel future growth velocity in the business. Now, I'm just curious why it is people think that PayPal deserves to trade at what I think is a discount of about 11 times forward earnings. When you check the narrative from scholars on places like Reddit, you see PayPal is used less and less, they say. They just got MySpace. You're seeing that phrase a lot too. But the idea that PayPal is being used less and less seems not to be supported by the facts or the numbers or anything like that. Look at the revenue growth. Does this look like a business that people are using less and less? To me, it looks like a business that people are using more and more, just the growth is a little slower than it used to be. But they're still continuing growth, which even in this last quarter, they had revenue growth, and they're projecting that to continue to the next quarter. If you're going to use the analogy that PayPal got quote unquote MySpaced, then who's Facebook? Just tell me that. I'd be really curious to know. And if they are being used less and less, why does their revenue keep going higher and higher rather than declining? I think at the end of the day, when you combine their still respectable growth with the fact that they're trading at a cheap price and that they have rewarded shareholders by dropping share count by over 5% in the trailing 12 months, you have a strong potential here for a multi-bagger sometime in the future. Now, it may take a while to get there because I believe right now the market is still pretty full of people who probably got burned when this stock dropped from, say, 300 or so per share down back below 100 per share. And that's understandable, but valuation matters, and I think that's just a case in point. At this price, it's a great valuation. At $300 per share, it was an absurd, unjustified high valuation. And now, of course, you have the tail wagging the dog, and anytime the price drops, people looking for any reason they can to justify it. For example, comments like this one. PayPal has no future. The only thing they do is process payments in a saturated market. Great when companies like Zelle, Snapchat apparently, Apple Cash, Venmo, and Cash App didn't exist. Well, first of all, Venmo is fully owned by PayPal. Now, when you pull it up, it says Venmo, a PayPal company. It has owned Venmo for quite some time now, but I guess this person missed the memo. And I'm really not sure how Snapchat is a competitor to PayPal. After all, Snapchat has never once achieved GAAP profitability, and it wouldn't shock me if they either went bankrupt or just got bought out. Oh, but I'm sure Cash App is going to kill PayPal. After all, they have 44 million active monthly users as of fiscal year 2022. I mean, wow, that's so impressive, right? I can see why people would say PayPal's dying because they only have, 435 million active users. Huh. Weird. I would have thought it would be lower. In fact, compared to Cash App, even Venmo is soundly beating them at 62.8 million active users. So I really don't understand how anyone could possibly think that Cash App is a credible threat to PayPal in any sense. Also, the usual suspects as far as peer-to-peer transfer competition for PayPal, a lot of them don't really have a way to send money to your friends internationally. And as far as I've been able to find in my personal life when I need to do this, Western Union is perhaps more available, more widely, but is more expensive. And PayPal is pretty much accepted almost everywhere. So usually you don't have to resort to anything but PayPal. But I don't believe there's really any way to do any international transfers with, say, Cash App or Zelle. So that's a corner of the market where they can't even begin to compete with PayPal. Also, not to pick on this user, but their comment continued that they came out with Pay in 4 as a pathetic attempt at survival, supposedly, and that the best thing they have is a credit card, which sucks as it's not competitive with other rewards cards. As far as I know, 3% rewards is pretty robust, and I don't think that they need to make any moves out of desperation just to survive. I believe they're financially doing just fine, as evidenced by their exceptional balance sheet and high free cash flow. But, you can be the judge of that. He also says he believes PayPal sucks, but hasn't looked at its chart. Well, I don't really care about the chart. I look at the financials, and financially, PayPal's doing quite well. And if you own stock, which is a piece of a business, and the business is doing financially well, that's a good thing for you as a shareholder. Who gives a rat's ass about the chart? I think at the end of the day, when you look into the negative mentality around why people try to justify a stock selling off, you find that there's a lot of flaws in the logic. And at the end of the day, the price movement of a stock is simply the sum of the actions of the market participants. And if those market participants feel a certain kind of way about a stock, they'll find what they need to find within an earnings report to either not buy or to sell off. If you happen to like this type of content and want more videos in the future, make sure you subscribe to the channel. Also, hit the like for the algorithm. You can hit the bell if you want to be notified when I choose to notify people. Join my Discord, link in the description. We discuss value stocks like PayPal all the time. Also, make sure you follow me on Twitter at Mr. Macho Mog. I am looking for my first 100 followers on there. Make sure you join, become a member of the channel to support me financially, and catch me every Saturday, 8 p.m. Eastern on Cashflow Kings Live.